Hey everyone, this is Mark from Stocks and Cash. It's February 5th, 2018, and I'm going to go over my market update, a couple of trades that I made today, and then some setups for tomorrow. Mostly all bearish. Actually, in fact, they're all bearish. Um, let's take a look at the SPY. Had a pretty devastating bearish candle today. Opened around here, kind of came back and tested the low of Friday's candle, and then literally just melted down most of the day. There was some reprieve in the middle of the day, but that was after a huge gap down around 2:30, which I'll show you real quick. If we take a look at the 5-minute here, you can see, like I said, we opened here. We kind of came back up. It looked like we were starting to recover a little bit. We touched the low or the close of Friday's candle, and then it was just off to the races down. Then we had this huge black candle around 3 o'clock and a quick rebound 5 minutes later. So a lot of volatility happening here. We kind of came back up and then just got beaten down again going into the close. Taking a zoom back out here. This downturn is real. This isn't any ordinary pullback, in my opinion. I'm not saying we're crashing. It's just not, a typical, few bearish day candles, little meandering down, and then a pop back up. There's a ton of volatility in the market, more than we've seen in quite a long time. If we take a look at the VXX, which is indication of volatility, you can see it was pretty high today. Well, this is actually trading the VIX. It's an ETF, but if we look at the VIX itself, you can see it's the highest it's been in about 3 years. So the close was 37.32. If we take a look back at this time frame, the close here was 40.47. So it's the second highest it's been in 3 years. So taking a look at August 25th, as you can see down below here, August 25th coincides with that big spike in volatility. If we go back to the SPY, you can see it's when we had some trouble back here. We had our down days, tons of volatility. You can see, we had from 197 to 181. That's a 16-point move pretty much throughout the day. I mean, just crazy amounts of movement. And we really didn't settle back down. We kind of had some normalcy here. Then we had another sell-off, and then we finally started to have a bit of normalcy. We continued on up for the most part. I wouldn't doubt if this situation was any different. The SPY did touch the 100 simple moving average, but my concern, if you look at the futures right now, this is as of 11:09. It's now 11:26, so we're about 20 minutes removed. But the Dow is down 615 points, 2.57, and the rest, you can see for yourself what's going on here. So this downturn is not over yet. There's the headline: Asian stocks plunge after bloodbath on Wall Street. There's I don't want to say there's no end in sight, but we won't know there's a bottom until there's a bottom. And so, I'm cautiously bearish. And I say cautiously because these things move so fast and can reverse so fast throughout the day. It's hard to tell if it's just a rip that is going to get sold off, or if it's a real kind of bounce. But I would expect to see some kind of doji candle followed by an upward candle. A bullish candle. Before we can say that we've reached some footing. Now, this line here, this ascending trend line, it's a weak ascending trend line. I mean, there's a point here, and maybe a point here if we bounce off of it. So I don't put too much stock into that line. What I'm looking at are levels of 255 and 249 about. I think those are realistic support levels that we could catch our footing, but until we get there, I am bearish, short term, intermediate term, I guess, over the next, few days until we show some signs of change. We could come down and retest again like we did today. Maybe we get smacked down by the 100 SMA. It's support as of today, but tomorrow it could be resistance. So I really think more of the same tomorrow. Let's take a look at the Qs. The Qs actually have more room to come down. They haven't gotten to the 100 simple moving average yet. I definitely think there's room for the Qs to get there. This does have a stronger ascending trend line than the SP and than the SPY. It has more points of confidence. This is a much more realistic trend line, but there's nothing saying that it will hold. We do have this, support level where the move took off. We have our 100-day, and then we have our trend line. So there is some confluence here, where we might have some footing, to start moving sideways a little bit, stop the bloodshed, so to speak. But until that happens, until we actually do see that and see some reversal and some big money flowing in bullishly, I think you have to expect that we're going to continue our bearish decline here. So be cautious, and personally, I wouldn't get into too large of positions. Make sure you can tolerate the risk and the swings in the market because of the increased volatility. You want to make sure you don't get whipsawed out of your trades. Taking a look at some potential trades for tomorrow, and it really depends how low the market opens. So taking a look at KHC, it had a big bearish candle, of course. It touched our 161.8 extension. That being said, if we push through there, I think there's a lot of opportunity for it to get to down to 69. That's about a 5-point move. You can, it's hard to say where the stop is because, again, if this thing is volatile, it could move around. But one play you might do, if it opens low, comes back and tests this trend line, this is where you could enter your trade when it comes back and back tests. That's where you could short potentially when, you'll see it come up, it touches. If it starts rolling over again, that might be your opportunity to go short and see if it comes down to 69 or so. May not happen all tomorrow, but that is a potential option to play that move. Dollar Tree is another one. Dollar Tree is below its 50 EMA, hasn't gotten to the 100 yet. It does have its 50 and 38% retracement. Hasn't gotten there quite yet, but excuse me. But it can still get there if the markets are as bad as they're looking right now. So I do kind of like Dollar Tree, and again, maybe we open low here, we come back and test the low of today's candle, and then continue on down again. I'd wait to try and get in short when it back tests, not right at the open. That being said, we could open low and continue on lower, but I would expect a bit of a gap fill before we start going lower once again. Taking a look at CPB, Campbell's, had an interestingly quiet day. Didn't really move down too much, but it is now below the support line. So, if it starts to move down, there's a lot of downside potential in Campbell's if we have follow through from today. So something to keep an eye on anyway. Looking at Walgreens, I do like this short. We have broken through the 55 and the 55 EMA, the 100 simple moving average. And looking at this last leg here, and let me just fix this trend line, this Fibonacci. Put down a little bit there. To coincide with this wick, we could come down to 67 and then down to 64. So again, about a $5 move on WBA. So I am kind of liking this trade depending on how the market behaves tomorrow. Tiffany's is another one that's pretty similar. Broke the 55, still can come down to the 100. It's through its 50%, so you can have your 98.46 at your 38.2% level as target 1. Target 2 will be 100, and then target 3 if we come all the way back down to 90. So you can see there's there's definitely some support, but if it plays out, there's a lot of opportunity to come back down to 100% retracement and make a lot of profit here. And of course, you'd be buying puts, to be clear, on these particular trades. Target, very similar, hasn't even come to its 55 yet. 100 still here as support, and then also the 100% retracement. Bearish indicators. I'm not quite as in love with this one because Target seems to be rather strong compared to some of the other stocks, especially in the face of this huge downturn in the market. So I'd be a little careful about Target in the fact that I just don't know that it'll necessarily move too far too fast. It might be a more slow moving bearish stock while the market is in the downturn. So just keep an eye on that. A couple more here. MasterCard. Now this is one I got into today and got kind of smoked on, unfortunately. You can see there was quite a large wick here. It was in the morning. I thought the market was kind of recovering. MasterCard has been strong. I got in right about here, and I am still in, unfortunately, in a very precarious position. So not too happy about that trade. But it does actually look like a shorting potential. The fact that it closed below the 21 EMA. You get the your 50 and 32.8 that coincides with the 55 EMA. Definitely some opportunity for MA to pull back. So, we're just crossing the MACD. Stokes are bearish, RSI is bearish, so we definitely have some opportunity to go down there. IWM is one that I have done really well on. I shorted today, and as you can see, I didn't short up here. I shorted later on in the day. If you remember on the SPY, we had that bounce down and then came back up. When we started turning over again in the last half hour, I bought some puts. They worked out really well for me, offset my MasterCard loss. So I'm pretty happy with that, and I do think there's much more downside here in the IWM. I think we come back to the 100% retracement level at 144. So at least, $3 more or so to go on the IWM. Lastly, Tesla. We're kind of sitting at support, but again, with the overall markets being so bearish, it's really hard to say what Tesla's going to do. There is this supporting trend line. We have our Fibonacci retracement trend line, and actually I need to redraw that. That's no longer accurate. So let's do that live here, from here to here. So we did close actually at the 50% retracement. You want to watch at the 32.8. If we come back down to this trend line here, this may act as support. And if the markets find a bottom, this could be a place for Tesla to bounce. If not, then I think it comes back at least down to 306, 307 area here. So unfortunately, we are in a bearish downturn. This may be a correction. It may be something even larger than the correction. But for now, we just have to kind of wait it out. Try and stay in cash and pick your battles with your shorts. You don't want to get caught with your pants down, so to speak, if the market does reverse and start heading back up bullishly. So that's where I see where we're at. If you have any comments or questions, please feel free to leave them. Look forward to hearing from you. Thanks, and have a good night.